The trading system I'm about to share with you guys has like an 80 to 85% win rate. And the reason I'm so confident in saying that is because I have not lost a trade using this in like a month and a half. And just for some proof, I'm posting all of my trades in real time. And this setup in particular, the one that I'm going to be going over in today's video, I've been watching the setup for like a week and a half. Okay, I had this setup planned out for so long. This was a textbook A+ setup. As you can see here, still watching this level on Fartcoin for potential long opportunity. And then it came down to the level. I said I'm long Fartcoin, and now the trade is running in profit. Let's jump into this video. I want to show you guys how we are able to catch trades like this every single day. And maybe not every single day, but 2 to 3 times a week, there are setups like this that you can take and that you can profit from. So let me make this full screen for you guys. So to start, we're going to remove all of the indicators and drawings. And what I like to do is go to a daily time frame. Okay, the reason I always start on a daily time frame is to determine my bias, determine my trend. Okay, what is the market doing right now? So I can clearly see that we are in an uptrend. Okay, we're making higher highs and higher lows. You know, people kind of overcomplicate market structure and that sort of thing. It's very easy to tell what trend you're in. Okay, if you can't tell whether you're in an uptrend or a downtrend, then you're most likely in a consolidating or a ranging market, in which case this strategy wouldn't work that well. You want to make sure you're in a trending market. Lucky for you guys, on pretty much all coins on a higher time frame, we are trending to the upside, which is giving us a lot of great long opportunities. So once I have my bias confirmed, okay, we're in an uptrend, I'm looking for longs. Now I want to drop down to the 4-hour time frame. I'm actually going to remove the easy algo support and resistance for right now. We'll jump into that in a little bit. But what I'm doing here on a 4-hour time frame is I'm marking out my major golden pocket fib level. Okay, so from the swing low to the swing high, I am looking for these levels, okay? The 0.65 and the 0.618 Fibonacci retracement levels. This zone right here is referred to as the golden pocket. This is the trading strategy that I use. I only take trades when price is at or below the golden pocket. And the reason I do that is because I want to make sure that I'm buying in discounted price. Okay, if I was to try to take a long, all the way up here, I would be forcing an entry. Price is not at a discounted entry. I want to see price retrace and then catch that continuation move back to the upside. Now, one thing about trends that you guys should know is that trends more often than not continue rather than reverse. So there's a higher likelihood of price continuing this trend from this level to the upside rather than the likelihood of price failing this trend and continuing to the downside. So until we get some sort of further confirmation that the trend is shifting to the downside on a higher time frame, we don't want to fade the trend. Okay, we want to ride the trend until proven otherwise. So after I have my major golden pocket fib drawn out, in fact, we'll go into back testing mode here. Pretend like we're taking it in real time. Okay, so this is the level that I'm looking to take a trade off of. Now, not only do we have the major golden pocket here, we also have some key levels. Okay, this is where the easy algo support and resistance zones come into play. This is an indicator that I have coded personally for my trading system. Okay, it removes the guesswork, gives me all these levels in advance, so I don't have to guess in finding these key levels. Okay, but what I'm looking for here is overlap. I'm looking for overlap between, okay, the support and resistance zones, and in this case, the support zone, overlapping this golden pocket. Okay, that gives me more confidence that if price comes down to this level, we're most likely going to bounce. Okay, because not only do we have a key level, right, a key support level with price history, meaning price has reacted from this level multiple times in the past. You can see this level acted as resistance, 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 broke out of this level, tested this level as support, and we'd be looking to test this level as support once again. So until proven otherwise, this is going to be a good long opportunity for us. Coupled with that, and we have the golden pocket fib from the swing low to the swing high, perfectly overlapping this level. This is a high probability, high confidence setup. Something else I like to use as another piece of confluence is the fixed range volume profile, okay, to the left here. Now, this is a built-in trading view tool. It's 100% free. It's called the fixed range volume profile. So if we hop into the settings here, this is what I look for, okay? I keep the value area volume at 70%. So what is this showing, right? This is showing the amount of volume within this range that I've drawn, okay? From this low to this high, 70% of the volume traded within this range is going to be within this box here, okay? We have the value area high, the value area low, and then of course the point of control, which is there in the middle. So I look for confluence in this case with the value area low, again, overlapping this level. So now we have 3 major pieces of confluence telling us that this is a key level. This is what I would call a key level. So now all we do is let price come down to this level. Okay, we don't force an entry. And as price is approaching this zone, we go to a lower time frame to enter the trade. So people often ask me, Matt, how do you actually enter a trade? Okay, I have a good setup and I know exactly where to take the trade from, but I just don't know how to get in the trade. Okay, and this is where it comes down to market versus limit orders. So there's two ways to enter a trade. Okay, two ways to enter a trade. Okay, either via limit orders or market orders. Okay, limit or market orders. So a limit order would mean you set a bid here, let's say at the 9328 level, with your stop loss a little bit wider on limit orders because it can be a little bit more volatile, meaning I don't have to be in front of my computer screen. I don't have to be on looking at the chart. I will set my bid in advance here. So if you're going to sleep or if you're working a job, you can set a limit order at your level. And as soon as price taps that level, you will get filled. You will enter the trade immediately, okay? That's the first way to enter a trade. Limit orders work best when you're on a higher time frame, when you're using something I like to call dollar cost averaging, which I'll talk about in another video. Or the second way you can enter, which is what I would personally recommend for most of you guys watching this, would be market orders, okay? Market orders means you manually enter the trade after you see a reaction from this level. So what I normally do and what I teach inside the Discord is I like to go down to a 15-minute to even a 5-minute time frame, okay? I'm going down to a lower time frame to look for an entry. So as price is coming down into this level, I am looking for bullish reactions off of this level to enter a trade. I'm looking for a few things, okay? The first thing I look for when finding an entry on a lower time frame are these bullish and bearish divergences, okay? In this case, it would be a bullish divergence because we're obviously in an uptrend. If you look down on the oscillator here, again, part of the Easy Algo package, which is the first link in the description below, I see this massive wave here in the oversold and then this smaller wave. If you watch Jason Casper, he will refer to this as the uneven butt cheek pattern, where you have one big momentum wave and then you have a smaller momentum wave. So momentum is actually increasing to the upside as price is creating a lower low. You can see price is making a lower low as momentum is increasing. And our algorithm even flashes this little bull here for bullish divergence once it's confirmed in real time. This discrepancy between momentum and price is referred to as a bullish divergence. This is the main thing that I look for when entering on a lower time frame. And just generally, I want to see a reaction off of this level. Okay, so as soon as I see that bullish divergence confirms, as soon as I see we have this AI buy signal on the algo, as well as this mild buy signal with this little blue X here, that is also telling me that price is most likely going to go up from this level. Okay, we also have an inverse fair value gap, which is a little bit more complex. I won't get into that in this video either, but there are a lot of confirmations on a lower time frame telling me to get into the trade. So once I see these, I'm getting in. That's it. If I want to wait for even more confirmation, I could wait for the Easy Algo trend bar to flip to blue. You can see the candle colors are gray here, and then finally it flips to blue for more confirmation. And that's when I'm entering the trade with my stop loss at that recent low, okay? That is it. A lot of you guys are overcomplicating how to find an entry. You just want to see buyers step in at said level with bullish divergences in this case, and that's it. Once you enter the trade, you set your stop loss and then you let your trade thesis play out. And oftentimes when you're using this strategy, getting an entry on a lower time frame, the risk to reward is often very large. So your risk, okay, this little red box here, your risk is smaller than your reward. So in this case, let's say I'm risking $1,000 on this trade, I would be up currently, $7,000 on this trade. So what's the average salary in the US? Like $4,000 to $5,000 a month. So you would have made the average monthly salary in the US on this one trade in one day, risking $1,000. Okay, that's the power of a good risk to reward. Now, we don't want to micromanage our trade once we're in it. Okay, so I see this as well with new traders that get into the group. They get into a trade and then they take profit like right here. Like when the trade's barely in profit, they already take their profit. Guys, the reason the system works so well and the reason why we're able to get massive risk to rewards is because we're trying to catch this next move up. Remember, what's our thesis behind this trade? Okay, why are we actually looking to enter along here in the first place? Well, it's to continue the trend to the upside. Remember what I said earlier in this video. Trends are more likely to continue than they are to reverse. So our thesis behind getting in this trade is that price is going to come down to this golden pocket, and then we are going to continue the trend, creating a higher high, continuing to break market structure. So if we know this going into a trade, why are we going to take profit before our thesis is validated? Okay, a good take profit level for a trade like this would be at the point of control or at the most recent high. Okay, so personally, what I would do here is I would move my stop loss to break even at the most recent structure high. So if I go down to the 15-minute, this is the most recent structure high here. I'd move my stop to break even at this point, but my first take profit isn't until this most recent high. okay, isn't until this level. And even the first take profit is like a 1 to 5 risk to reward. Okay, this is the power of having a very high risk to reward. You could have like a 30% win rate, which by the way, if you're using this system properly, like I said, you shouldn't have a below 80% win rate. If you're waiting for all of the right confluences, you're finding your key levels, there's no reason why a trade shouldn't at least hit your first take profit, unless it's like a massive news day or something. Even still, you can have a 40 to 50% win rate, but because your risk to reward is so high, you can be very, very profitable, even when you're losing more trades than you're winning. Now, another reason why this is an A+ setup and why this works so well is because of this liquidity low right here. Let me draw this out for you to make it more clear. So let's say you have an uptrend. Okay, price is making higher highs and higher lows. You draw out your golden pocket from that swing low to that swing high. Anytime you have this low right here, okay, this previous structure low right above your point of interest, okay, or right above your golden pocket, this is an extremely high confidence, high probability setup when you see this structure form on your chart. Because not only do you have your key level, okay, with your golden pocket fib, you also have this previous structure high sitting right above it, meaning there is liquidity here, okay, or open orders here that need to get taken out, creating a swing failure pattern. Okay, if you don't know what a swing failure pattern is, that's something for another video. But essentially what you want to look for is that previous structure low right above your key level. Okay, it just adds more confidence to your trade, more likely to play out. You can see we have our major golden pocket, we have our key level, and you can see right here we had this liquidity low right above that golden pocket. So as price is coming down to this level, we're anticipating price to sweep this low, reclaim this low, and as soon as price reclaims this low after tagging that golden pocket on a lower time frame, that is another really good entry. Okay, so I have my level marked out. Okay, price tags into the golden pocket. We reclaim that gray level that I had drawn out, the previous structure low with bullish divergences. This is an A+ setup. And like I said, this will work like probably 85 to 90% of the time. And that's it, guys. That is the full trading system. It's not super complex. You're just identifying key levels with price history, looking for that golden pocket fib overlap, and then going down to a lower time frame, looking for reactions off of this level, and then trying to catch this next move to the upside to continue the trend. That is how we do it, baby. That's how we've won. Like, I think inside of the pro Discord, like the past maybe 15 to 20 trades in a row. Now, if you guys want to learn from myself directly, as well as get access to the indicators that you see on your screen here, make sure to click the first link in the description below. I'm also going to be doing live streams Monday through Friday here on this YouTube channel for entirely free. So make sure to subscribe to the channel. And just another look inside of the pro Discord, not only are we giving you guys setups, analysis, and the Easy Algo indicator bundle, we also have a group of really good pro analysts here. You can see we're giving you guys the entry, the stop loss, the take profits, and we haven't lost a trade in like months, guys. Hawk's crushing it. It's straight take profits. I could scroll up for like a month and it's just take profits. It's just take profit after take profit. Go to Neil here. Let's see Neil. Okay, take profit 2, Pepe take profit. Again, I can keep scrolling up. We have been absolutely crushing. People that are brand new to trading that haven't seen profits a day in their life are turning into profitable traders within like 30 days after joining the group and learning from us. 80% P&L on the day. Shout out Alex, man. He's been crushing. Easy's been crushing. I mean, here's a fart corn long just for some more proof that I call this in advance. Our students are taking these trades as well. One of our students is number 4 on the leaderboard for the breakout prop. He made $24,000 today. You just have to be patient. You're not going to take a trade every single day. In fact, this setup here on Fartcoin that I was looking at, I was waiting like 2 weeks before the setup even came to my entry. So if I go into my channel, April 27th, this was the main long idea that I was looking at. Okay, again, waiting for bullish divergences to enter the trade. That's it for me in this video. If you guys have found value, make sure to leave a like, subscribe to the channel if you haven't already, and I'll see you guys next video.